Hey, good morning, Chloe. Good morning. Good morning. Let's see here. Let's make sure everything is working. Yep, we're looking good. We'll get started in like 5 minutes or so. Yeah, let's see here. Turn this screen on. Hey guys, I'm also on YouTube if you guys want to hang out over there. I don't know if some of you guys work and you can't look in Discord or something like that. So I will be live on my YouTube channel and we'll get started. All right, let's see here. Let's see what the forecast is today. And hmm, ooh, nice and flat, nice and calm. That's good. I like that. Good deal. And like I said, we'll get started in about 3 minutes or so. Hopefully everybody's doing well. It's felt like 2 weeks this week almost, right? I feel like it. And let's go ahead and let's put the advancers up here today. I'm gonna put these right over this area right there, and we'll be watching these. And let's get some music in here as well. Wearing my hat today. Woke up with a little bit of hat head. Nice calm day though, right? Today would definitely be a beach trade sort of day. It's a little chilly here this morning, but I'm sure it's going to warm up. But I want to go over a few things with you guys just because the market is, it's had a relief bounce last night. And if you follow me out on Twitter or you're a member here at Trendy Trading, then you guys would know that I sent out a VIX chart that I was waiting on to be hit. And then I would expect a little bit of volatility to come in. Sorry, a little volatility to kind of pull back and we get that relief bounce. Now, what they've been doing for the majority of the time is future traders are taking advantage of the levels and of the aftermarket action as always. But it seems to me that they are getting the better end of the stick, if you will. So, what is retail left with? And I think that's the most important part. Um, and we're going to talk about that here in a few minutes and how we can approach that. So, just bear with me here and we'll get started in about 1 minute. So remember, here at Trendy Trading, we have scripts that I use, and these scripts help me to define what scripts I'm going to use for what type of time frame. And you need to understand where we are in a cycle. And currently, the best way to understand that cycle is to understand how to read a bigger time frame chart. And in this case, the bigger time frame chart that I am referencing is going to be the quarterly and the monthly. Now, most of you have tuned in or have listened to me for the last several weeks, and you would understand that I love the quarterly chart during this because you can see that the market is choppy. And because of that, every day we come in, you have to understand that we could see chopped down. So that means the trades to the upside are very limited. The percentage gains that you might be used to getting on a option trade is a little bit less than what you would expect. Okay. So because of this, if you're taking trades to the upside, I would say your allocation, well, we can keep our allocation the same, but the amount that we are trimming at is a lot less than what we're used to. Okay, so like 20%, 30%, 50% to the upside. Okay, downside is just as difficult right now because it's not a capitulation event. In some cases, on the futures or SPX, you could see some nice gains there, but a lot of it is just kind of chop. And I want to show you what I'm looking at. Let's go ahead and start with the ES futures. All right. Now, again, I say this every morning. I'm going to go ahead and remind you that ES runs about 10 points for every dollar in the SPY. Okay. So even if you don't trade the futures, you can still use the same blueprint. Just understand that if I'm looking for 10 points to the downside, then on the SPY, you'd be looking for $1 to the downside. Okay, and vice versa to the upside. Okay. All right, so here's the ES futures. This is a new blueprint for today. And this is what I want to show you. My concentration today is on this daily chart. All right. The first thing you're going to note is that we went inside and down. We teach about this. The next thing you want to note is that we are underneath the cloud. As long as we are underneath the cloud, then we understand that this cloud is resistance. Okay. Now there's a lot of divergence here, or divergence in current price, which is here, and the cloud. This is going to be your reward if for some reason the market has found a bottom and we're looking for prices or bids to come in, and buyers can push price up basically through the entire day. You could see a move towards my expected range. Okay, and this expected range, you guys know, I pretty much hit it on the nail every single time. I'm looking for a 42.46 level, or 42.46.25 to the upside. And as far as the downside today, I'm kind of sticking, I'm throwing it out there that maybe this support holds. All right, it's okay if it doesn't, because we are approaching this market with this if this then that scenario. Okay, I don't want to get too married to intraday trading. I don't want to get too married to a thesis, because I need to be able to react and make money on the day. Okay, so this is not long term. All right, so if we can hold the support, and you can see the support comes in around 41.69, then we could see prices move into 42.46. Right now, these two levels here are what I would consider a bear channel for this week. As long as prices stay in here, just kind of hang out, don't do much. Bulls need 42.01 basically, okay? and bears, you need prices to drop below this support at 41.69. Basically, between 41.69 and 42.01, this is a neutral, if you will. Okay, so again, just a neutral. What you could do is take the two levels that I just gave you and create a box, come down to that support, and right here, you could just label this neutral. Okay, just like that. All right, now we're going to go ahead and do that, and I want to show you. This makes trading a little bit easier. It keeps you from making mistakes. A lot of people don't see that at first, but after you do this for a while, you're like, man, I'm glad I didn't take that trade outside of there, and I'm glad I didn't go short, because sometimes we just chop around. So I'm going to create a box here, and lucky you, I've already created a bunch of templates. We're going to call that neutral, just like that. All right, and I'm going to put some levels around that. And basically, this is the market in a whole, right? We don't want to do much here. So we're going to take this away, clean this up just a little bit. Okay, just like that, and boom. Okay. All right, and there we go. And that is your neutral. So far as right now, price is just hanging out in that neutral, and you can see that we're just going sideways. Okay. So again, that is ES Futures overall sentiment today. Check out these nice flush low wicks. We do have some support in here. It is in a neutral zone and in a bear channel of this week. And your reward could be up here towards the 1-day EMA cloud. Let's go ahead and break it down into a smaller time frame. And I want you to see the power of just using an EMA cloud. So important. As I said earlier, as long as price is staying underneath this cloud, you can expect sideways to down. If you don't have an EMA cloud, that's okay. You can probably find one. Everyone's is different, right? Mine's a little bit more complex than some, but basically the gist of it is all the same. You don't want to be looking at buying puts on the way down. You want to be looking at buying puts on the way up in a sideways to down cycle. Okay, you see what I'm saying? It's very hard for new traders and veteran traders to get into this practice, but the risk to reward is so much better for you. Okay, so what I mean by that is you're looking at buying calls when we're either coming into levels, all right, that in my case is called trendy edges, and then we look to take trades here, or if I'm getting signals to go long or short, right? So again, long signals or at levels, and then shorts are coming into the cloud, and you can use levels within this cloud as well to be looking at going short. Now, as a disclaimer, I will tell you this. You have to understand the cycles of down and up. It is normal to see anywhere from 2 to 4 days of a down cycle, just the same as 2 to 4 days of an up cycle. What I mean is, if we've been coming down for 2 to 4 days and you're just getting a short signal, then maybe it's not the best time to go short. Again, you might want to wait until we bounce into the cloud. All right. So you got to be thinking about that. So where are we in reference to this? Okay. Let's go ahead and take a quick look here. Give me 1 second while I get into my main chat. There we go. So let's go over to the day and just kind of figure out, again, how many days down? Well, we're getting this 1, 2, 3, and then green, right? So we get that red to green. Now we're going on to 1 and then inside. All right. So this pattern recognition here is just 1 day down, and now what I would consider a relief bounce unless we start to bid out of this bear channel. Okay. All right, let's go ahead and move on. The next thing that we want to look at is going to be the SPY. Again, 10 points in the ES, about $1 in the SPY. Okay. How can we approach this? Well, if you notice, it looks a lot like the ES, right? It pretty much is the same chart. All right. So we have divergence, we have support over here, and we have this cloud. So again, if the SPY bounces, which it is, just like the ES, then look for these levels to be resistance until they're not. Let me take some of this off, all right, so that we can concentrate on the levels that we have. All right, so right here, notice that we picked up into a level that I annotated, okay? And then we pushed up. This purple line right here, this is a trendy edge. These edges are resistance until proven otherwise when you're underneath them. When you're above them, you look for them to be support. It's as easy as that. Notice here we came into them, we look for support, price pushes up, you have a good time, and then you see this big ugly red cloud and you think, okay, time to start trimming, start to get out of the trade. All right. Then we go back down. We're buying puts in the cloud, guys. We're not going and we're not buying calls in the cloud. All right. So price pushes down. It breaks through the trendy edges. Now it becomes resistance. Notice price pushes up into this area. And that, again, is resistance until proven otherwise. So this morning, again, you have the neutral to help you out there on the ES to kind of understand this. For right now, on the SPY, guys, 420.49 by 421.90 is resistance for now. Okay, so that's the SPY. Let's go over here to Microsoft. They had some earnings, right? All right, so what does this look like? Well, the 4-hour, this is what's important for today, in my opinion. They are currently up about $12, okay? But I went ahead and threw this channel on for you. I'm not the biggest fan of shapes, but shapes can help you. I always say this, and I'm going to continue saying this, that shapes are there when you are just absolutely neutral. When you can't figure out your technicals, you could throw a shape on something and say, okay, I see the shape, and in this case, I'm just going to hold out until something happens within that shape, right? So let me go ahead and show you what I mean. Well, here, all right, we are in this channel that I put on here. Your channel could look different than mine, but my channel says that basically we came up and hit that top rail, okay? And this has been resistance a couple times here. Matter of fact, it's been resistance 4 times now, all right? 4 times. And this is resistance until proven otherwise. So again, that neutral strategy comes into play for me. I really don't want to think about going long unless we could break over the rail, or if we pull back into one of my trendy levels. In this case, guys, 275.37 and down here towards 266.60, those two levels. So it's if this, then that. Does that make sense? If this, then that. If price breaks over the rail, this looks pretty bullish up into the resistance around 288.49 or 292.95. If price breaks down into my trendy edge, which is around 275.19, or breaks down into support, then I'm willing to go long. Everything between is speculation. This is going to keep you from losing a lot of money. A lot of speculation leads to profits diminishing. I promise you that. Try your best to trade only at levels. Then when you take a trade at a level, make sure you're using stops. Stops are cool. They really are. In the long run, they're going to keep you from losing lots of money. All right. We go into a lot of this and I educate on stops. You don't have to have a stop in options as long as it's within your risk tolerance. Okay. Very important to understand that. It takes a long time, matter of fact. All right. So Microsoft, again, I give you those levels. Let's go ahead and move on into Apple. All right. So Apple has earnings coming up. Let's go ahead and take a look here. 28 April. All right. And then just for any of you that might have your mic on, just make sure you are muted. I'll go ahead and server mute you really quick. There you go. All right, so we have earnings coming up. Today is the 27th. Well, they're saying that Apple is tomorrow. I love to play spreads, but let's go ahead and look at it from Trendy Edge's perspective, okay? And show you guys, how this is moving within the edges. Basically, this big blue line, this is a longer time frame Trendy Edge, and you can see that it's resistance. Down here, this is a longer time frame Trendy Edge. You could see that this is going to be your support. If I were selling iron condors for, several weeks, this is where my iron condor levels would be, okay? This would be where they would be. You're selling calls here and you're selling puts here. That's not sexy, but you're able to make money during all of this chop. Okay? Now, Far as earnings go and far as like intraday and so forth goes, this is the level that I'm looking for. This makes it really easy for me. So what I could do is create a box. I'm going to find this trendy edge and I'm going to find this trendy edge. Okay, and I'm going to create something that looks like this. I like to talk about entry on reclaim. If you don't know what that means, that's okay. You can come here and check us out for $5 for a week and I'll teach you everything I know or as much as you ask. Okay, so we're looking for price to pull back into here and then I'm looking for a reclaim. If you don't understand where these levels are, that's okay too. Let's go ahead and create a target. And then anybody that's out there that's using your trading view, check this out. I just like learn this by messing up. You may already know it, but if you want to duplicate, a lot of times you right click on it and then you look and you go, okay, I want to clone, right? You want to clone this, but guess what? It's even easier than that. Click, hit control, keep control down, and then just move. Check that out. It's pretty neat, right? Anyways, so what I'm doing is taking two trendy levels, identifying them, and creating what's called an entry on reclaim. This is going to be a box where I'd be interested in buyers showing up. All right, and then looking up, I'm going to go ahead and find levels of resistance. I could do this by using some fibs. Let's go ahead and do that. I'm already projecting that price will come down here to this green box. So this right now is going to be my target to the upside, just like that. And I'm going to also deem this as resistance because I know it is. And I can teach you why I know that. All right, so let's take that off just like that. And again, entry on reclaim, resistance, or a target, depending on how you want to look at it. All right, so that's AAPL. Far as earnings go, you guys know I like to trade debit condors. Those are like my favorite. I don't mind iron condors. You could just switch my debits and sell credit if you like. But I like to go for the small risk, high return because a lot of our levels do work. Okay, and when they work really nice. Kind of like last week when we hit Netflix, right? All right, so this is what I'm looking for on Apple. Let's go ahead and move over here into Google. And it is 8:08. That's awesome. I kind of like this 40 minutes instead of 30 minutes. What do you guys think? I don't know. It depends on my members. I'm here for my members, right? If this is too early for you guys, just let me know. But it kind of gives me a little bit more time to sip on some coffee and just chill. I want you to see this, all right? What do you guys see here? You trying to sleep? All right. Lies, lies. All right. All right, Brock. I like that, man. Well, you'll know. If I change it up, I'll let you know. So here we are on Google. All right. And the first thing you're going to notice, if you're taking notes, these are my higher time frame edges. Okay. So here in the room, we teach about these and we know that the upper level is resistance until proven otherwise, okay? And we know that this mid-level is support until proven otherwise. Well, going into earnings, right, you could be trading this name into earnings, okay? But what about, into the report itself? Again, you could do condors, you could do debit spreads and so forth. But I want to show you the importance of these levels and how much they really help you, whether you decide to trade them or not, and whether you're just spectating, that's okay too. Notice here that we come up into the trendy edge. This is resistance until proven otherwise. And for any of supply and demand traders, if you go over here and you take a look, you can understand why this trendy edge is working so well. All right, very cool. So again, resistance, you're not going to go long, because we can't even close over this level here, okay? And then you could see that price then pulls back. We break the cloud. This is all in hindsight, if you will. But as long as price doesn't get over this level, you're looking for prices to move back into the edges. These edges now become targets, all right? Notice that we get down towards the lower edge and we find support. It doesn't look like a big deal until you start really looking closer and understanding that buying the edge here could give you a nice little run into 2548 by 2623, almost $100. Then we break underneath the cloud, and again, it's down, sideways to down. Just say that, okay, guys? If you have a support level that's broken for the rest of your trading career, say this out loud, that you expect sideways to down until that area is broken. Okay, you see what I mean? Just like this morning, see this 2280 on Google? Well, guess what? I have a level here. I have a trendy level. And what I can say to myself is this is resistance until proven otherwise. And that's going to keep you from losing money. You know what I mean? Because now you have to find an area of support before you go long. All right. And then when you do find your area of support, you have to figure out if I take a trade here, I know that resistance is here. Does it make sense from a risk to reward scenario? And if it does, then you take the trade. Like it's that simple. Okay. All right. Let's take a look. This is all old stuff here. I'm going to move that. And you can see that current price is at 2279. Now, this is a gap fill, guys. Google is falling into a gap fill right now on this chart. Did you know that? Now you know. All right. Lucky you, I've already templated some things here. We can go right into this gap fill and we can actually name it gap. And it says gap fill. So I like this gap fill, and then I'm going to create a line underneath this structure, something we could talk about in the future if you don't know. Let's go ahead and create that. Okay. And then I'm going to come over here like this. And guess what? We have ourselves a nice little pretty box here, and same thing. Okay. So this is going to be what we consider an entry on reclaim. Okay. Just like that. Boom. All right. So what am I looking for here? I'll just quickly go over it. We don't have to necessarily take a trade, but let's just say that price continues down. Okay. What we're looking for are for bids to come in. And then I would like to see bulls pick it up and go over what was resistance become support. That is the idea here. Now, if we go into the 4-hour, you can see that this structure actually held. And this is the first time I looked at this. But just by using the gap fill in that structure, this is an area where you would buy. So whether you did it pre-market, after-market, it doesn't matter. The point is it worked, and I know how to identify that, and I'm able to help you identify that. Okay? So going forward, this is an entry on reclaim. This is going to be your resistance. Notice that this resistance that I just found you by using the trendy edge happens to be confluent with the 4-hour EMA cloud. I love that confluence. That's called synergy. Everything's kind of coming together on this methodology to create the best levels out there. Okay. All right. So this is the trade plan for Google this morning. All right. And if I go to one more time frame, I want to show you this. Okay. This is the weekly. We have structure here. We have a gap fill. This is definitely structure that you want to pay attention to. If for some reason this box does not hold this morning, look for price to come into 2131, and I wouldn't expect it to lose 2022. 2022. That's right. This year is 2022. I don't know about you, but it feels like it's been 2 years in 1 year. It's a very long year already for us traders, right? All right, topping wicks. These things just look nasty. They keep telling you bears are in control. I have a video out there on YouTube, guys, where you can watch about topping wicks. It's very short, just a couple minutes, but man, it can change a lot of stuff for you. Let's go ahead and look at the dollar. Very important. John, why is the dollar so important? It just is, okay? And we've been doing this a long time, and let's just make it easy. When the dollar's strong, the market tends to pull back, okay? And there's a lot of other factors, but we sent this out ages ago. We found some supply basically right here in this red box. And when the market just pushes through resistance or supply, it's okay. You don't have to go short right away. There's a technique of just being on the right side, right? It could be just chilling, not doing anything, or just understanding the levels. This weekend, I went ahead and told you as long as bids are staying above here, you need to stay cautious. Okay, you need to stay cautious. While we're doing this, I need very quickly to look at the fear and greed index. I'm pretty much giving you guys a broad market analysis on a Wednesday. Okay, and I think that's good. Anytime the market's in turmoil, basically we need to know what the hell's going on, right? So let's see here. CNN, you can go over to Google and look at fear and greed index. It is currently at a 27, guys. So this thing goes from 0 to 100, and we're at 27, which means fear. Just below 25 is extreme fear, and I love extreme fear. I seriously do. Everybody will tell you that. This is where I feel like most people, they start belling. You know, they're scared, they're getting wicked out, their stops are gone. They use some levels they thought would work, those didn't work, and basically you lose all hope. You get out of the trade, and what I'm looking for are what I would consider trendy levels, demand levels, and I'm looking to start buying further out positions. Now, in this market, this is a very patient market, and I don't think that we've found a bottom yet. And in saying that, just because I find an area to go long, I can tell you this, that it usually only lasts anywhere from 1 to 3 days this year. So don't get too hyped up just because the market pulls back. Just understand that it could be just a very small relief bounce, if you will. All right. And so again, just because I found something that might, say that the market could go up, it doesn't mean it's going to go up very long. All right. The dollar, as long as it's staying in here, be cautious. Okay. But you have to look at this like if this were a stock and I were trading it, I would have to admit that it's a little extended, guys. A little extended from the EMA cloud. So I would be looking for the dollar to kind of calm down a little bit, cool off, if you will, digest for a week or two. We're getting close to there. All right. And if you look at the monthly, you cannot ignore the fact that if this were Apple or this were Tesla or anything like that, a chart is a chart, guys. We are absolutely extended from the monthly cloud. And if you notice from the past, that is not very common. We like to come back into that cloud and digest, as I was saying, right? Right. So this level up here had already been tested 1, 2, 3 times. And that's why this time what was resistance is now support. Different look for the dollar. Okay. Now the dollar's holding this area. A little bit different. Okay. So as long as it's holding this area, you need to be cautious. If it starts to digest, what you're going to get in there is most likely 1 to 2 days of some sort of relief rally. All right? Nothing wrong with that. All right, so that is the dollar. I told you the fear and greed is at fear. Below 25, we start hitting extreme fear. Well, that leads me into the skew. This are your hedge funds, and they're basically saying, just look at my chart. All right? Protect, risk off. Green, risk on, and so forth. Currently, what we're looking at is 137 as of yesterday. All right? You want this thing to rise. You want fear and greed to go up. You want fear to go up. You want all these things telling you, oh my gosh, it's the end of the world. But these things cannot alone create a trading process. You have to be able to identify whether or not your favorite stocks or the broader market is coming into what we consider demand. If it's not coming into demand, this is just essentially a tool. That's it. Okay. All these things I'm showing you are tools. But when we look at the charts, we need to be able to identify whether or not things are coming into demand. All right. All right. So how can we know that? Well, lucky you guys, out on the newsletter that we just pushed out, we talked about how to trade supply and demand. So make sure you watch that. I hope that everybody in here has watched that, and anybody that's watching me, I hope you're watching that. All right. Let's go over here really quickly. I'm going to give you an example. Let's look at QQQ. We're at 8:21 with 9 minutes to go. I'm going to take you to a higher time frame. This is a monthly chart of the Qs. All right. Now, at first, it's really hard for a lot of traders to really understand the value of supply and demand because, to be quite honest with you, it's always been really, I would say, sketchy. There's a lot of stuff out there on YouTube where people claim to understand supply and demand and how to identify supply and demand, but a lot of them don't have the proper education around it, and they kind of just take after other traders who might have taught them something, right? So a lot of us, we tend to be able to see levels and understand where buyers will show up before buyers do. So it looks kind of strange, right? People are like, how did, is that real? How did they do that? And so forth. I promise you, you can identify these levels and you can create a very high probable area of an entry, whether it be long or short. Looking at the QQQ, what's important right now, let's go ahead to the pre-market. They're flat. Okay, they're only up 4 pennies. All right. And when I'm looking at this, we knew that we didn't want to be long unless it was just an intraday trade. As long as price was breaking down below 345.39, it was not a buy time. Okay. Matter of fact, I'm looking at my trendy levels and I'm looking for price to move into this blue line by this blue line. Okay. Once again, identifying some demand here. I'm looking for price between 310 and 297 right now. Can price turn around before it gets there? Sure. But we have instruments and scripts that help us play that bounce. But for right now, my bigger picture is by identifying the higher probable setups for buyers to step in on the cues. Basically, we are creating some amazing range, guys, for the future. And the future, or right now, the intraday looks a little grim, right? But I'm telling you, I love this setup. If we go over to the quarterly, this baby right here we talked about last week, this is an inside and down. This is also telling me you better be careful, right? And you better be careful as long as price was breaking down below 362. Well, here we are at 317. We were right. Okay. Again, boom, 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 boom. We're into the cloud. We are looking for support here. I'd like to find that support right here in this little zone. Let me go ahead and put a box there, guys, just so you can see it. So right in here, I'd like to find some support there for what we consider a relief bounce. Okay. All right, we'll come back. We'll check it out a little bit later on. Maybe at the end of the week, we might be down there. Maybe today, we might be down there. We'll see. But my plan for right now is exactly what I talked about in our member update here. And I'll go over that just really quick. The ES 2022 projection. This is very important as well. Let me go ahead and detach this so you guys can see it. And I do these every year, okay? And I do these before, the market starts. And we come up with, by using levels and so forth, kind of look at what we're projecting. So my projection for this year to the downside, this year was a little bit different. Last year, we pegged it. I mean, literally within points, 1 year looking out. And we'll see what we can do this year. This was a if this, then that. And I asked traders to be very, very patient this year because this was a year of patience. See, we are underneath the higher time frame edge, and as long as we stay under here, we're looking at 2022, we continue sideways to down. Same stuff I was just teaching you, but you got to be looking out on a very longer horizon, okay? So my projection for the downside was here at 37. You can see 38.63 by perhaps 35.86 and a half. Okay. Right now you are coming into, we are making higher lows at the moment. So maybe not. We start to take out those lows. I think things they do look like they want to come down into this area. I feel like a lot of people want to see that. It's kind of like being at the Coliseum or something, right? I just, I kind of feel like we're all looking for that. So since we're all looking for it, I'm always a little skeptical of something happening, like a big bounce. So just be careful, have some sort of plan. Good luck today. The market's not easy by any stretch. If you're having a hard time, you're not alone. I think a lot of people are having a hard time. But the key is how long can you sustain in this market, right? How long can you be here? And I think that is derived around having a great process, a great plan, understanding trend, understanding allocation, and so forth. Okay. That's right. All right, so what I'm going to do on open, let's come over here and just see what we have set up. I have the SPY on a smaller time frame. We're going to watch it from a 5 minute, okay? And because I did tell the room that I'm looking for a little bit of trend to happen. So it's going to be a little choppy, but I do expect choppy. But I do expect a little bit of trend to take hold today. So we'll be watching that, okay? And you can see I'm already getting some buy signals coming in on the 5 minute. But again, don't forget about your resistance. All right, don't forget about your resistance. And we got a PMZ here, pre-market zone. You guys can see your risk here, down here. And you guys know how to trade that here in the room. And let's go over here. I was watching Ford. I don't think that I'll be watching it today. I really don't. We'll see. Okay. I don't really have any particular names at the moment, except for the ETFs. So my main focus is going to be SPY and Qs and so forth. Maybe a little bit of SPX as well. Okay. And we have the SPX auto alerts going here with this. I'm actually going to come in here and put our auto future trades, put those there. All right, so we got SPX and auto going good. And you could see these come with a stop and entry price. And I think I told you guys this morning we changed the time frame on some of these. Hey, Beezy, you watching, man? Coming to see you soon. I hope you have a good spread. I've been waiting for some good food by the chef. All right. All right, so I'm going to try to probably coach here on YouTube and here for the first 30 minutes, kind of show you guys some cool things that you can use on the open. Um, so I'm going to come over here and I'm probably going to switch back and forth to smaller time frames so you can see. Oh, sweet. And before we get started here, let me see if my dog needs to come in. Hey, buddy. All right. All right, nice push here. A little bit of quick money to the upside. Let's go over to, be looking for this to be resistance until it's not this blue box that's forming up here. That's Parker in the background. He looks like a horse. Yeah, I could post it, man. Give me 1 second here. Yep, there's Google. Actually, I'll just take it over to a day so we can see everything. There we go. Let's do focus right here. Let's do Apple. And let's do, I think, Microsoft we talked about as well. There we go. Yeah, we'll just see if we can come into a couple of these levels here. Be interesting to see what kind of moves we get. The question is, how long do we need to wait? 30 minutes to an hour, before we do anything. It's been kind of one of those weeks, right? You really, really want to execute very quickly, but just a lot of patience today. Nice relief bounce in the market so far. All right, so we've reached the PMT on the SPY. You can see the signals are working quite well for the 5 minute. You could be making, some quick money. These boxes up here are resistance until they're not. It's kind of a big deal for the day. Um, let's see what we have as far as. There we go. I see Ford came down into the edge, guys. Buyers showed up. They do make an edge. That is right. Let's see what Microsoft is doing over here. BA really took a dump there, didn't they? And what is our, let's see, our advancers are sitting at 1600, guys. So, and, and that is basically in the scalp territory, okay, for right now. Bulls, you want above 2000. Actually, a little bit in the chop scalp territory. Put that right there. All right, and let's go ahead and show you the VIX chart that I gave you yesterday. Okay, see how that happened? So the VIX spiked into the trim possible rejection, and then what you see is the market relief bounce. And so the VIX is indeed underneath the resistance that I gave you yesterday. Let's go ahead and look at the dollar really quick. All right, still pretty strong. Oil, we were looking at a short yesterday. Okay, and I was waiting for USO to push up into this green box before I went short, but you can see it just kind of filled the gap and then gap down. But I am looking for oil to come back down into the 72 by 70 area. A lot of patience here. Baba, nice little move, up $4 this morning. China names. China names so hard to commit to. I think everybody's having a hard time with those guys. I feel like what you pay is what your risk is, you know. All right, let's see how some of these blueprints are working out. Microsoft. Okay, so far, not doing bad here. And again, could push up towards the 287 before it pulls back. And then my next one was Google. And you can see a nice push there out of the box. Actually, a really nice push. Could see up towards 2356 if it holds here. So HD definitely something that I've been scouting, you know. It's definitely building some support here. I love it for a seasonality play. I've almost played it every single year going into Mother's Day weekend, into summer. It's just kind of taking its time. I feel like it's accumulating down here at support. It's inside so far on the monthly. This would be a longer term trade, trying to, trade it up towards 330. Um, but again, they do have earnings coming up into 17 May. So a little bit of time. And I'm going to change my SPX. Let's see my time frame here on a couple of these. So we're going to go. And we're gonna go with right here. It's kind of what I expected today. A little bit possible trend. Yeah, let's go. Yeah, I see the 5 minute signal is working very well. Leave it right there. So this is called the deer in the headlights for a lot of people after such a big move down. The pops are going to be hard for a lot of traders to execute, you know. This is where I personally rely on signals and so forth and our intraday levels.